Hello everyone. Breaking news from China. Ban on lending restricted shares signals potential short squeeze, altering market dynamics significantly. So we received breaking news from China. Wow, this could trigger a short squeeze, potentially. And tomorrow, we can only hope to see China's stock market decline, because this is quite significant news. This undoubtedly concerns Shanghai and Shenzhen. They have decided to prohibit strategic investors from selling shares during the lockup period. So this is quite significant. And let me tell you more about it. First, let me explain the issue to you. All right. The issue is that in China many times if a company goes public in the US, they usually give some shares to Morgan Stanley or these issuing firms, and those are restricted shares. Now, the same thing happens in China as well. But the thing is, for example, some companies' CEOs, some shady companies, they take these restricted shares from the firms, issuing firms, and then essentially sell them. They take and sell them and then also sell their own shares. Basically, they sell more shares than they have because they've taken some shares. And then when the stock price drops, they buy back those shares and then return them to the issuing firm. And this happens quite often. This is actually about short selling, but you are short selling with restricted shares, and this often happens with big institutions and individuals. You can't do anything about it, and short selling is illegal by law. And yes, the company doesn't have permission to sell shares. That's a correct assumption. They have those restricted shares. They can't sell them, but they can give them to others to sell, and they make some money by lending those restricted shares. That's why China has completely banned this, basically not allowing it to happen at all. And this means we might see a short squeeze in the coming days. Many people in China are saying we will see a gap up tomorrow. There's a high probability in Chinese equities. Very probable. And this, by the way, was always a loophole in shorting stocks, which should never have existed. They are actually closing that loophole. And now it has become quite difficult to short stocks in China. No other loophole. And this will definitely help Chinese equities, and it will be implemented tomorrow. So actually, anyone who holds a short position in Chinese equities there in China, and those shares are definitely borrowed from these restricted shares from another company or investors, then this is illegal. They will have to return them. This is actually quite good. This is very good. Reuters has stated the following. China securities regulator announced that from tomorrow onwards, lending of restricted shares will be completely banned, marking the latest effort by policymakers to stabilize the country's stock markets amid a recent sharp downturn. A series of support policies from Beijing, including cuts in bank reserves, brought Chinese stocks to a 5-year low earlier in the week, but they rebounded on Friday, signaling deep investor pessimism about the market downturn and weak economy. According to analysts and investors, Beijing should roll out more support measures to revive consumer and business confidence and put activity on a firmer footing. Restricted shares are often given to business employees or investors with certain restrictions on their sale, but they can be lent to others for trading purposes, such as short selling, which can exacerbate market pressure in a prolonged downturn. Sunday move will shed light on fairness and transparency, reduce the overuse of securities lending, and impose restrictions on the use of information and tools in favor of institutions, giving all types of investors more time to digest market information and generate fair market orders. The Chinese Securities Regulatory Commission said in a statement on its official WeChat account that this step was taken to end illegal activities that use securities lending to reduce holdings and cash out. The regulator announced that it will limit some securities lending efficiency in the securities refinancing market starting from March 18. Last October, the CSRC restricted securities lending businesses and tightened scrutiny on improper regulatory arbitrage by imposing higher margin requirements. China's stock market witnessed a downturn in 2023 and has continued this decline into the new year. Although the blue-chip CSI 300 index has somewhat reduced its decline. It's currently down about 3% year to date. Small Chinese investors are attempting to exit the crumbling stock markets even more vigorously than foreigners. causing premiums on global index funds to soar as they seek exposure away from any sputtering domestic economy. China economy grew by 5.2% in 2023, slightly exceeding the government target. However, this comparison was made against a weak lockdown-hit 2022, and the recovery has been highly uneven. December data showed lackluster consumption and a sharp decline in home prices compared to the past 9 years, indicating a deep crisis in the property market. Both the Shanghai and Shenzhen stock exchanges have announced that they will suspend securities lending during the lockup periods for strategic investors from January 29th. So looking at Chinese equities, they have risen sharply in the past few days, currently standing at 2,900. And I'm thinking that with this short squeeze event, which, as you know, essentially involves the government squeezing shorts, we could definitely reach 3,000 in the Shanghai Composite. This seems like quite a promising action to me. Where we go from here will be interesting to see. It appears we might reach around 3,000, maybe even close to 3,100. All right, this is indeed a significant number they're aiming for with these new stocks, a formidable number they're targeting now. Let's also take a look at NIO. If NIO also bounces back and rallies like other Chinese equities, and if we follow suit, we might easily reach 6.75. And this could be quite intriguing because we have a channel running here. Boom. All right, and if we truly want to go high, I think we'll have to break this 6.75 mark around this area. We'll have to break through this together, and we have to keep our focus on it, along with keeping it together, or else we'll know this level. Yes, this could be a challenging area to break, but I think we'll find something to see, and maybe rise higher and at least get there. All right, at the very minimum. Breaking news from China. A ban on lending restricted shares hints at a potential short squeeze, reshaping market dynamics. Shanghai and Shenzhen have restricted strategic investors from selling shares during lockup periods, closing a loophole in stock shorting. Reuters reports China's securities regulator moved to stabilize stock markets amid recent downturns, aiming to restore investor confidence. The regulator measures aim to enhance fairness, transparency, and curb illegal activities in securities lending. With the Chinese stock market facing a downturn since 2023, analysts call for additional support measures to bolster confidence. The Shanghai Composite may surge to 3,000, with NIO rally potentially reaching 6.75, marking a significant milestone. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing and see you in the next video.